Imagine losing thousands of dollars this year, not because of a bad investment, not because of a job loss, but because of simple money mistakes that millions of Americans are still making every single day, mistakes that are completely avoidable and honestly pretty easy to fix once you know what they are. And the crazy part, most people don't even realize they're doing them. So stay with me till the end of this video, because I'm going to walk you through the 7 biggest money mistakes Americans are making in 2025, and more importantly, how to avoid them so you can keep more of your money. And finally, start getting ahead. Hey everyone, welcome back to the channel. If you're new here, I break down personal finance in a simple, easy to follow way for people living right here in the United States. From budgeting to saving to investing, we talk about everything you need to build a strong financial future. And today's video is a big one because 2025 has brought higher prices, higher interest rates, more economic uncertainty. And the truth is, most people are still making money decisions based on old habits. But the world has changed. The economy has changed. And if you don't adjust, you risk falling behind. Before we dive in, drop a quick comment down below and tell me, what's one financial mistake you feel you made last year? Be honest. You're not alone. And you might even help someone else by sharing outright. Let's jump in. And mistake number 1 is a big one that affects almost every American. Mistake number 1 is not adjusting your budget for 2025 prices. And this is huge because the cost of living in the U.S. has changed a lot in the last couple of years. Groceries are more expensive, rent is higher, insurance premiums have gone up, and interest rates are still affecting everything from car payments to credit cards. But most people are still budgeting like it's 2020 or even earlier. They're using old numbers, old spending habits, and old expectations. And that's why their money feels out of control. Here's the truth. Your budget should change every year, especially now. Wealthy Americans do this automatically. They review their numbers, update their spending categories, and adjust to the economy instead of pretending everything stayed the same. Middle-class Americans, many don't update anything and then wonder why they're short hundreds of dollars every month. So here's what you should do. Take a few minutes to look at the actual costs in your daily life. Not the costs from last year. The costs right now. What are you paying for rent, utilities, groceries, insurance, gas subscriptions, kids' expenses? All of these have changed. Once you update the numbers, your budget immediately becomes more realistic and you stop feeling like your money keeps disappearing. This one adjustment can save you from late fees, overdraft charges, and going into unnecessary debt. And speaking of debt, that brings us to mistake number 2, which is one of the most dangerous habits Americans still fall into, especially in 2025. But before we jump into that, drop a comment and tell me, when was the last time you updated your budget last year? 2 years ago? Never. Be honest. No judgment here. All right, let's move on to mistake number 2, and it's a big one. Mistake number 2 is carrying high-interest credit card debt, and this one hits millions of Americans hard. In 2025, the average credit card interest rate in the U.S. is well over 20%. That means if you're carrying a balance, your debt is growing faster than you can realistically pay it off. And here's the scary part. A lot of people don't even notice it happening. They swipe, they make the minimum payment, and they think everything's fine. But that minimum payment is a trap. It's designed to keep you in debt for years, sometimes even decades. Wealthy Americans avoid this mistake completely. They treat credit cards like a payment tool, not a loan. They use credit cards to earn rewards, build credit, and track spending. But they always pay off the balance in full. But the average person, they buy things they can't afford and then spend years paying the price. Here's what you can do to avoid this mistake in 2025. First, stop using your credit card for anything you can't pay off at the end of the month. If it's not in your checking account, don't buy it. Second, if you already have credit card debt, consider moving the balance to a 0% APR balance transfer card. This can give you 12 to 18 months of interest, free breathing room, which is a huge deal. Third, automate your payments. Even scheduling the minimum payment automatically helps protect your credit score. Then add extra when you can. And finally, don't feel ashamed of your debt. Millions of Americans have been through it. The important thing is taking control. Now, in the next part, we're going to talk about mistake number 3, and this one affects almost every American who's living paycheck to paycheck. It's something small, but it drains your money every single week without you noticing. Before we continue, comment below and tell me, are you paying off your credit card balance monthly, or are you still working on getting there? Your honesty might help someone else watching. Mistake number 3 is ignoring subscription creep. And trust me, This one is costing Americans hundreds, sometimes even thousands, every single year without them realizing it. Subscription creep happens when you slowly collect recurring charges, streaming services, apps, memberships, digital tools, cloud storage, meal kits, fitness apps. The list goes on, and because each one is only 10 or 15 bucks, we don't notice. But in 2025, the average American household is now paying for over 9 active subscriptions. Most people only use half of them. Wealthy Americans don't let subscriptions drain their money. They audit them regularly. They know exactly what they're paying for and exactly what they're getting out of it. If something isn't adding value, they cancel it without hesitation. Here's what you should do. Take 5 minutes, literally 5 minutes, and check your bank account or credit card statement for any recurring charges. You'll be shocked how many things you forgot you were even paying for. Then ask yourself a simple question: am I actually using this? If the answer is no, cancel it. If the answer is kinda, that's still a no. If the answer is yes, then keep it. But keep track of it. This one step can free up an extra $50 to $200 a month, which you can redirect towards savings, debt, or investing. And that adds up fast. And here's something important for us viewers. Many apps and services intentionally make it confusing to cancel. But you have the legal right to cancel subscriptions at any time. Don't let companies' guilt trip you into staying. In the next part, we're going to talk about mistake number 4. And this one is a major reason why many Americans stay stuck financially, even when they earn a decent income. It has nothing to do with budgeting and everything to do with planning. Before we move on, drop a quick comment. How many subscriptions do you think you're paying for right now? More than 5, more than 10? Let me know. I'm curious what the average is. Mistake number 4 is not having an emergency fund, and this one causes more long-term financial damage than almost anything else. In the United States, unexpected expenses aren't just likely, they're guaranteed. A medical bill, a car repair, a broken appliance, a job loss, something always comes up. But here's the problem. Most Americans don't have even $500 set aside for emergencies. And because they're unprepared, they end up using credit cards, payday loans, or borrowing money just to deal with basic problems. That's how debt starts, that's how stress increases, and that's how people stay stuck financially. Wealthy Americans avoid this cycle completely. They build an emergency fund before they invest aggressively because they know one unexpected event can wipe out months or even years of progress. Here's what the top financial advisors in the U.S. recommend. Aim for 3 to 6 months of essential expenses in a separate high-yield savings account, not in your checking account. Not in cash under your mattress, but in a safe interest earning account that you don't touch unless it's truly an emergency. And don't feel overwhelmed. You don't need to build it all at once. Start with a small goal, $1,000. Then build up from there. Even saving $20 or $30 a week adds up over time. And here's something important. Keeping an emergency fund isn't just about having money. It's about peace of mind. When you're not scared of a sudden expense, you make better decisions, you avoid debt, you sleep better, you have room to breathe, and yes, you absolutely need this in 2025. Prices are high, insurance deductibles are rising, and repairs cost more than ever. An emergency fund is no longer optional, it's essential. In the next part, we're going to move into mistake number 5, and this one is something many Americans don't realize they're doing wrong. It involves investing, and it explains why so many people miss out on building real wealth. Before we continue, comment below and tell me, do you currently have an emergency fund? If yes, how many months does it cover? If not, don't worry, you're not alone. Mistake number 5 is waiting too long to start investing. And this is one of the biggest reasons many Americans struggle to build wealth. A lot of people think they need to be rich before they can start investing. They think they need thousands of dollars, special knowledge, or perfect timing. But none of that is true. The real secret to building wealth in the United States isn't timing the market, it's time in the market. The longer your money is invested, the more compound interest works in your favor. That's the rule. The wealthy understand better than anyone. But here's what happens to most people. They wait, they overthink, they try to save more first. They fear losing money, and before they know it, years have passed. Wealthy Americans do the opposite. They start early, even with small amounts. They invest consistently, not randomly. And they don't let fear stop them from getting started. Here's what you can do to avoid this mistake in 2025. Open a Roth IRA or traditional IRA and contribute whatever you can. In the U.S., a Roth IRA grows tax-free, which is a huge advantage for your future. If you have a 400 WUNC and your employer offers a match, take it. It's free money. You don't need thousands to start. You don't need to pick individual stocks. Most experts recommend index funds or ETFs because they're simple, diversified, and historically reliable. Invest automatically. Even if it's just $50 or $100 a month over time, that can grow into something massive. And remember, the earlier you start, the less you need to invest later. The next part, we're going to talk about mistake number 6. And this one keeps millions of Americans stuck in financial stress year after year. It has nothing to do with income and everything to do with habits. Before we move on, drop a comment and tell me, hey, have you started investing yet? Or are you planning to start this year? Your answer might inspire someone else watching. Mistake number 6 is lifestyle inflation. And this one quietly destroys financial progress for millions of Americans every single year. Lifestyle inflation basically means this: when your income goes up, your spending goes up right along with it. You get a raise and suddenly you're eating out more, you get a better job and suddenly you upgrade your car. You move to a nicer apartment, buy nicer clothes, take nicer trips, and before you know it, you're making more money. But you're not saving or investing any more than before? This is incredibly common in the U.S., especially in 2025, because social media constantly pressures people to level up, and higher prices make upgrades feel normal. But wealthy Americans avoid this trap because they know something most people don't. More income doesn't automatically mean more freedom. More savings and investments do. Here's how the top 1% handle lifestyle changes. When their income goes up, they keep their spending almost the same for a while. Instead of upgrading everything right away, they increase the amount going towards savings, investments, and future goals. For example, if they get a $300 monthly raise, maybe only $50 goes to lifestyle improvements, and the other $250 goes straight to their investments or retirement accounts. This small habit keeps their wealth growing year after year. Meanwhile, the average American ends up in the same financial position, even with higher income, because their expenses rise just as fast. Here's what you can do before upgrading anything. Ask yourself, do I actually need this, or do I just want it because I'm earning more now? If it's not a true need, give yourself 30 days before making the decision. You'll be surprised how many things you no longer feel excited about after a month. Avoiding lifestyle inflation can save you thousands of dollars over time, money that can go toward paying off debt, building an emergency fund, or investing for your future. In the next part, we'll get into mistake number 7. And it's a big one, something that keeps Americans financially stuck even when they're doing everything else. Right? It's the final piece that ties this whole video together. But before we continue, let me know in the comments if your income increased today. What's the first thing you'd be tempted to upgrade? Be honest, we've all been there. Mistake number 7 is not having a long-term financial plan, and this mistake is more common than you might think. Most Americans focus only on what's happening right now. This month's bills, this week's expenses, today's problems. And because of that, they never create a roadmap for where they want to be financially 5, 10, or 20 years from today. Here's the truth: if you don't have a plan, your money will control you, instead of you controlling your money. Wealthy Americans think ahead. They know exactly where they want to be. They plan for retirement. They plan for buying a home. They plan for their kids' education. They plan for emergencies. And most importantly, they build their day-to-day budget around these long-term goals. Meanwhile, the average person just reacts to life as it happens, and that's exhausting. It leads to stress, confusion, and constantly feeling behind. Here's how to fix this in 2025. Take 10 minutes, seriously, just 10 minutes, and write down 3 long-term goals. For example, I want to retire comfortably. I want to buy a home. I want to pay off all my debt. I want to invest consistently for the next 20 years. Once you know what you're aiming for, your daily money decisions start making sense. Saving becomes easier. Investing becomes easier. Saying no to unnecessary spending becomes easier because you're saying yes to your future. This is exactly how the top 1% think. They don't just plan for today. They plan for tomorrow, for next year, and for the next decade. That's how they stay ahead financially. And remember, your plan doesn't have to be perfect. It just has to exist. You can adjust it, update it, and improve it as you go. What matters is that you're finally giving your money a direction. Next part, we're going to start bringing everything together, and I'll walk you through how to avoid all 7 mistakes with one simple system. This is where everything clicks, and you'll see how easy it is to build a strong money foundation going into 2025. Before we continue, comment below and tell me, do you currently have long-term financial goals written down? Or is that something you're planning to start this year? Now that we've gone through all 7 major money mistakes Americans need to avoid in 2025, let's start pulling everything together, because here's the good news. You don't need 7 different strategies to fix 7 different problems. You can avoid all of these mistakes with one simple system. It starts with awareness. Most people get into financial trouble because they're operating on autopilot. Money comes in, money goes out, and they never really stop to look at the bigger picture. But the moment you become aware of your habits, your budget, your debt, your spending, your future goals, everything begins to shift. The top 1% didn't become wealthy by accident. They became wealthy because they built systems that protect them from the everyday money traps most Americans fall into. Here's what that system looks like in simple steps. First, update your budget for 2025 so it reflects real prices, not old guesses. Next, stop carrying credit card balances. Even if you have to automate payments or move your balance to 0% APR, audit your subscriptions and eliminate anything you're not truly using. Start or rebuild your emergency fund so life doesn't throw you into debt. Beg and investing consistently, even small amounts count. Stay aware of lifestyle inflation, especially if your income increases. And finally, create a long-term plan so your money has a direction. When you put these steps together, something powerful happens. You start feeling in control. You stop stressing about every little purchase. You stop guessing. You stop reacting. And you start moving forward with purpose. And the best part, this works no matter your income level. Because financial progress isn't about how much you make, it's about how well you manage it. In the final part of this video, we're going to wrap everything up and talk about the one mindset shift that makes all of this work long term. And then I'll leave you with a powerful call to action that can change your financial life starting today. Before we move on, drop a quick comment and tell me, which one of these 7 mistakes do you think has affected you the most? Your answer might help someone else realize they're not alone. All right, we've reached the final part of this video, and if you're still here, that already tells me something important. You're serious about improving your financial life in 2025, and honestly, that's the biggest step most people never take. So here's the mindset shift I want you to walk away with. Money isn't something that just happens to you. It's something you can control starting today. Avoiding these 7 mistakes isn't about being perfect, and it's not about being rich. It's about making smarter decisions with whatever money you have right now. And once you do that, your financial life starts to change faster than you think. Because when you update your budget, when you stop relying on high-interest credit, when you eliminate useless subscriptions, when you protect yourself with an emergency fund, when you invest consistently, when you avoid lifestyle inflation, and when you build a real plan for your future, you stop surviving and you start building. Remember, wealth isn't built overnight. It's built through small, smart choices made consistently over time. And you're already ahead of most people just by watching this video until the end. So here's your next step. Take one thing from this list, just one, and start fixing it today. You don't need to change your entire life overnight. You just need momentum. Once you start, everything else becomes easier. And now here's my call to action for you. If this video helped you, if it opened your eyes, or if it gave you even one idea that can change your financial situation in 2025, hit that subscribe button. It tells YouTube you want more videos like this, and it helps this channel grow so we can help more people. Also, make sure to like the video. It really helps push this content to others who need it. And finally, drop a comment and tell me, what's the #1 money mistake you're committed to avoiding this year? I read every comment, and I'd love to hear your plan. Thank you so much for watching. Take control of your money, make smart choices, and I'll see you in the next video.